Hello, Steve here with iMortgage Calculator, the Canadian mortgage payment calculator. Let's review the mortgage comparison tab of iMortgage Calculator. One thing you can use here with the mortgage comparison tab is to determine if it's worthwhile for you to renew a mortgage early, pay it out, pay a penalty, and take a new term. So let's use an example. Let's say your balance today is 300,000. Oops, 300,000. And originally you took a 35-year amortization, and you've been paying on your mortgage for 3.5 years, so there's about 31.5 years left. Let's say you took originally a 5-year term, so 3.5 years, that means there's about a year and a half left on the term. And let's compare those apples to apples, so let's make a 31-year term, or sorry, 31-year amortization, and keep the payments monthly, and the term 1.5 year term. And your interest rate today, or the interest rate you have on your mortgage that you took 3.5 years ago, is 5.5, and today you could renew if you paid the penalty at 3.89. So as you can see, at the end of 1.5 years, when this mortgage would come up for maturity, there would be a $2,000 savings if you did in fact renew early, and you would have $300 a month approximately in payments. So a savings of $300 a month plus $2,000 in principal. A more direct way to compare this is just to adjust the amortization to make the payments the same. So you would keep the payments the same, and you could see that if the payments were the same, you early renewed, there's about a $7,000 savings in principal. So if you were to pay a penalty of less than $7,000, then over the remaining term you would save the penalty, and you would still have this very good interest rate for the balance of the term that you chose. This is most likely a 5-year term. This is Steve with iMortgage Calculator, the Canadian mortgage payment calculator.